What if I told you that financial success before 40 doesn't look like what we were once told? Forget about the white picket fence and mortgage bills. In 2026, it's about financial agility, technological sovereignty, and building a future where you control your wealth. But how do you start? What are the essential goals that will set you up for financial freedom, security, and growth? Stick around as we dive into the top 5 financial goals you should aim for before 40. Let's set you up for long-term success starting today. 1. Establish a career pivot runway 12-month fund. We've all heard of the traditional emergency fund, a small savings account that can cover 3 to 6 months of living expenses if things go south. But in 2026, that's not enough. Why settle for just weathering the storm when you can be ready for any career shift? The first financial goal you should work towards before 40 is creating a career pivot runway fund. Instead of just saving 3 months of living expenses, aim for a full year's worth, stored in high-yield liquid assets. This runway isn't just for emergencies. It's your exit money. In an AI-driven economy, job roles and industries evolve at a pace faster than ever before. A year's worth of living expenses allows you the freedom to pivot professionally without the pressure of finding a job the moment your current role becomes outdated or stagnant. Whether you want to take a break to upskill, start a business, or just explore a new career path, having a solid financial runway lets you do so with confidence. This goal provides you with a cushion to pivot when opportunities arise, making sure you're not forced into decisions out of financial desperation. It gives you the flexibility to make moves that are in your best interest, and it secures your future while you grow and evolve in your career. Having a career pivot runway fund also helps you resist the temptation to accept the first job offer that comes your way when you're in a tight financial spot. You'll have the leverage to negotiate better terms, seek roles that align with your passions, and avoid rushing into a position that doesn't serve your long-term goals. Additionally, with industries evolving so quickly, new opportunities will arise that might require learning new skills or taking time to innovate. With this financial buffer, you can take a temporary step back, pursue a certification, or start a side hustle to further your goals without the constant stress of living paycheck to paycheck. In today's rapidly changing job market, having a solid runway fund not only protects you from financial uncertainty, but also empowers you to take charge of your career and future. By working toward this goal, you're setting yourself up to thrive in whatever comes next, no matter how the job landscape shifts in the years ahead. 2. Reach the $500,000 compound ceiling. By your 40s, you want your investments working for you, not just contributing to your wealth, but growing it exponentially. One of the most powerful financial milestones you can hit before 40 is to build at least $500,000 invested across your 401k, brokerage accounts, and health savings accounts, HSAs. Why is this amount so significant? Statistically, once your investments reach this critical mass, they begin to experience compounding growth at a rate that outpaces your annual contributions. In simpler terms, the money you've invested will start to work harder for you, generating returns on the returns you've already earned. Achieving the $500,000 mark before 40 means you've set yourself on the path to financial freedom. At this point, even modest returns from your investments can provide the basis for a comfortable retirement, regardless of how much you save afterward. By focusing on growing your investments early, you're creating a snowball effect. The earlier you start, the more time your money has to grow. Reaching this milestone before 40 ensures that your wealth-building process is accelerating, not stagnating, and sets you up for long-term success. This milestone also enables you to take advantage of more advanced investment strategies, like tax-efficient withdrawals, dividend reinvestment, and even real estate investments, which can further diversify your portfolio. With a solid foundation of $500,000 invested, you'll have the flexibility to adjust your financial strategy as you move toward financial independence, secure in the knowledge that your wealth is working hard to support your goals. 3. Achieve geographic income independence. The world is evolving, and in 2026, living anywhere you want while earning a living has become more achievable than ever before. The third financial goal you should aim for before 40 is achieving geographic income independence. This means securing at least one income stream that's completely decoupled from your physical location. What does this look like? Think rental income from properties in cities around the world, digital dividends from online investments, or a remote-first consulting retainer that allows you to work from anywhere. This is all about creating wealth that isn't tied to one geographical location. Why is this important? By your 40s, you want to have the option to live in a lower cost of living area or relocate to a tax-friendly jurisdiction without sacrificing your ability to earn. Whether it's for lifestyle reasons, family, or taxes, having the freedom to live anywhere without impacting your income means more flexibility and control over your life. Geographic independence is a powerful goal because it gives you the freedom to make choices that align with your life's priorities without being restricted by where your paycheck comes from. It provides financial freedom in the truest sense, allowing you to choose a lifestyle that suits you, not your employer. With this independence, you can design your life to prioritize what matters most to you without compromise and still have the means to thrive wherever you choose to be. 4. Fully self-insure your tech and health stack. In a world where technology and healthcare are integral to your success, one of the smartest financial goals before 40 is to fully self-insure your tech and health stack. What does this mean? You need to create a dedicated sinking fund that covers your out-of-pocket health insurance maximums and the full replacement cost of your primary professional tools. Think about it. Your health and tech infrastructure are your lifeline in the modern world. As a knowledge worker, freelancer, or entrepreneur, losing access to your laptop, AI subscriptions, or specialized hardware can cripple your ability to earn. In the same vein, unexpected medical bills can derail your financial stability. To protect your cash flow, you need to own your infrastructure outright. A fully self-insured tech and health stack means you won't be dependent on high-interest financing or small insurance claims that add up over time. If your tech goes down, you've got the funds to replace it immediately. If you face an unexpected medical emergency, you have the savings to cover it without tapping into your wealth-building funds. By building this kind of buffer into your finances, you're ensuring that your career and health are well protected, giving you the peace of mind to focus on growing your wealth without constant worry about potential financial setbacks. 5. Own a productive, non-correlated asset. The final financial goal you should focus on before 40 is owning a productive, non-correlated asset. This goes beyond just investing in the stock market. In 2026, it's critical to diversify your wealth across assets that don't directly follow the movements of the S&P 500 or traditional market cycles. Examples of non-correlated assets include tokenized shares in specialized industrial firms, private credit funds, or income-producing physical assets like rental properties. These types of assets pay you regardless of market fluctuations, providing both financial and mental stability. Why is this important? Having assets that aren't tied to the stock market means your portfolio can withstand black swan events, such as market crashes or economic downturns. This type of diversification ensures that your wealth doesn't entirely depend on the ups and downs of traditional markets. Owning a productive asset that generates consistent income also allows you to reap the benefits of steady cash flow. Whether it's dividends from a private credit fund or rental income from real estate, these assets create a passive income stream that helps secure your financial future. By the time you hit 40, your portfolio should be robust enough to survive market turbulence, and a productive, non-correlated asset is a key piece of that puzzle. That's it for today's video on the top 5 financial goals to achieve before 40 in 2026. By setting these goals in motion, you're putting yourself on the fast track to financial security, independence, and freedom. If you found these tips helpful, make sure to like this video, share it with anyone who needs to hear this, and don't forget to subscribe for more on building wealth in the 21st century. Thanks for watching, and I'll see you in the next video.